morning, everybody. Today is February 4th, Tuesday, 2020. I'm in a really good mood, obviously, because as I predicted yesterday, the stock market jumped. It's up almost 400 points, and I made 100 to 200% on my options on Facebook and DIA. DIA is an ETF that's being traded on the market, and it matches Dow Jones Industrial Index. So now we have to enter a little bit of a waiting game. And the reason is that everybody who wanted to buy the stock market, they actually were able to do it today, because the reason the stock market jumped 400% in the first basically 1 hour of trading is that we had a lot of buy orders that just arrived, and the pressure created the pretty dramatic price jump. So now you have to be more cautious, and I would say look for dips inside of the trading day to carefully start entering positions. I would even recommend at this point to buy some put options. I'm not sure if you're familiar with that, but put options allow you to basically sell a security, let's say a stock or ETF, at a fixed price. So for example, we had a big jump of 400 points today, another jump of 150 points yesterday, and I'm sure that we should not expect this type of jumps every single day. So because of that, it makes sense to actually kind of freeze the high price of Dow Jones that is being traded via DIA ETF, and right now it's being traded around 288 points or $288. So I would probably buy a put that would expire either this Friday, February 7th, or next Friday, February 14th, to protect yourself, not protect it, but for just to fixate the high price of Dow Jones at this point, due to this recent jumps over the several days, because I'm sure that we are probably not done with all the bad news that coronavirus could bring us, which means that at any time we should expect some kind of bad news arriving to the market that will create sell pressure that will probably take DIA to $285 level instead of $288 where it's right now. Remember that just yesterday it was trading at $282, and I actually had a bunch of limit orders for the call options. Call options allow you to buy the stock at a fixed price versus put options that allow you to sell a stock at a fixed price. So the volatility is definitely here right now, which obviously is good for active investors, but you have to play smart on this volatility, meaning that there's a pretty reasonable corridor for example DIA to trade right now, and this corridor is between $281 and $290. So it's about $10 corridor. So my strategy is to go on the market, find let's say right now the Dow Jones is again pretty high, near the record levels. So I would search for put options that are being traded at no more than $1.50 per contract, and put some limit orders, for example, to buy them at 125. If your order goes through, then follow up with an order at $1 per contract, meaning that, you know, there's a possibility that the contract is going to become cheaper by about 25 cents, or, you know, around 25%. So it makes sense to put another order for this probability. If your order at $1.25 gets executed, then and you still think the stock market is high, being traded at, let's say, 287, 288 level, maybe 286, I would still put an order for $1. At this point, I would stop and basically let my orders stay, since, you know, I was able to basically enter it 3 times. I would say $1.50, $1.25, another $1, or maybe $1.25, $1.75. In any case, if you would like to know what to buy on the stock market, please download our app via the website foretf.com. It covers 2,200 ETFs and is being updated daily with buy and sell recommendations. Thank you for your time and good luck trading.